That's right, it's Melbourne again. After reducing the land tax threshold and cracking down on the real estate investment, the Victorian government has made another significant move. This time, the focus is on cracking down on Airbnb short-term rentals. Not only do landlords need to be licensed to operate, but they also have to pay an annual review fee and an additional short-term rental tax. This further squeezes landlords' profit when dealing with high mortgage interest rates now. As a result, they may eventually have no choice but to sell their properties, increasing the supply of properties for sale and putting downward pressure on property prices. What exactly is this policy and how will it affect real estate investors? Will New South Wales and Queensland follow Victoria's lead and tighten the short-term rental market? How should we, as investors, respond? Hi there, my name is Alex. Welcome to my channel where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Let's get straight to the point. The City of Melbourne Council has passed a resolution to implement a brand new policy. All Airbnb-type short-term rental properties must pay an annual registration fee of $350. Yes, that's for each property each year. Moreover, a property can only be rented out for a maximum of 180 days within a year. This policy is set to be implemented in February 2024. Think of this registration fee like a car registration. You renew it and pay for it every year. The City of Melbourne covers a large area, including central and surrounding districts like Melbourne CBD, Docklands, South Bank, South Yarra, and more. These areas are predominantly filled with medium to high-density residences with a lot of Airbnb listings. How many exactly? According to the City of Melbourne's statistics, there are 4,100 Airbnb short-term rentals, accounting for 14% of all properties. This policy has already been approved by the Council and is now in the revision stage, with implementation set for next February. The government hopes that by imposing taxes and making regulations stricter, Airbnb will become unprofitable, forcing landlords to either switch to long-term rentals or sell their properties. It would increase the availability of long-term rental options for local Australians, reducing the pressure of rising rents. The goal is to improve the living conditions in Melbourne. While this sounds like a noble cause, it might choke the revenue streams for real estate investors. Most medium to high-density residences have owners' committees. For instance, in a building with 100 apartments, each owner has voting rights in the building's management. Previously, many Airbnb listings operated under the radar, unknown to these committees. But with the new registration system, once you've paid and obtained a license, your license number and registered address will be publicly available on the government's website. This transparency might change the dynamics, eliminating the gray area. It's either a yes or no. If it's not allowed, it's not just one property affected. The entire building might be prohibited for short-term rentals by the owners' committee. Then there's the issue of subletting. Many Airbnb listings are properties rented from agencies by tenants who then sublet them as short-term rentals. Whether they started doing this due to financial pressure or planned it from the beginning, even if the agency ignored the problem and let it happen, landlords can now find out. Again, the gray area disappears. Think about it. If landlords were okay with Airbnb, why wouldn't they do it themselves instead of earning less through a middleman? Next, we come to tax matters. With the registration and the disappearance of the gray area, landlords who previously might have hidden some income can no longer do so. Even though they should have been paying these taxes all along, their operational costs have genuinely increased. There are also concerns about safety and compliance, like fire safety and noise issues. To comply, there might be additional renovation costs. But that's not all. Let's speculate a bit. Given the current trend of squeezing short-term rental profits and increasing policy compliance costs, what's next after this licensing rule? Perhaps there will be mandatory insurance, or short-term rental landlords might need training before operating. Or there may be additional clauses to the license, like being subject to random inspections by government officials anytime. Given the current Victorian government's record, there's nothing outrageous they cannot do. By now, many real estate investors might be feeling anxious. But hold on, this is just the beginning. Not only do Airbnb-type short-term rentals need to apply for licenses and undergo annual reviews, but Victoria is also considering introducing a brand new tax specifically for short-term rentals. The Victorian government is actively considering the introduction of a 7.5% levy on short-term rentals. It means that if you stay in an Airbnb in Victoria, the rent will increase by 7.5%. with this additional amount going straight to the government's pocket. As of the time of this video, the tax proposal is still under discussion. However, given the consistent approach of the current Victorian government, I believe there is high likelihood of this tax being implemented. According to the internal forecasts by Airbnb, if this tax is introduced, the nightly price for an Airbnb in Melbourne CBD will increase by $17. In the Surf Coast south of Geelong, it will rise by $29 per night, and in Mornington, the nightly rate will go up by $42. This short-term rental levy will significantly impact the tourism industry, leading some in the sector to call it the tourism tax. However, the Victorian government, when weighing the tourism against the well-being of its residents, has chosen to prioritize the latter. So while they are cracking down on the short-term rentals to free up properties for long-term leasing and address housing issues, they're also inadvertently or intentionally hitting the tourism sector. Melbourne residents have mixed opinions on this. Some argue that the Victorian government is once again targeting property investors, continuing its money-grabbing approach. Others claim that the socialist Republican Victorian government is infringing on property investors' rights. Of course, there are also those who support the government's actions. In a previous video where I analyzed Victoria's budget, I mentioned that the Victorian government, having accrued significant debt during the pandemic, is currently on a 10-year debt repayment plan. With the state's productivity not picking up and unable to generate wealth quickly, they are relying on immigration and taxation. And the main focus of their taxation? That's right, real estate. Currently, property-related taxes in Victoria are the highest in all of Australia. Just a couple of months ago, they lowered the land tax threshold, causing property investors to pay more on land taxes. They've also recently put restrictions on increasing rents for long-term rentals. And now they're eyeing the money from short-term rentals. If the Victorian government and its fiscal policies don't undergo fundamental changes, this trend will likely continue in the coming years. But what's even more concerning is the potential ripple effect. If Victoria successfully implements these policies, how will New South Wales and Queensland react? They might not have previously considered taxing Airbnb or introducing licensing, but now they can simply follow Victoria's lead, tweaking and adopting its policy framework. While the government didn't initially have the resources to manage the short-term rental industry, the introduction of licenses and registration fees could perfectly solve the funding issue. It remains to be seen how the market will evolve after the government's crackdown on Airbnb. While there's no precedent in Australia, recent actions against Airbnb in New York, USA have elicited various social reactions. It's uncertain how landlords will adapt and whether the expected long-term rental properties will indeed be released to the market, as the government hopes.
New York beginning its crackdown on rentals today.
Over 20,000 listings that disappear after today, because today marks the first day that New York will start enforcing this new law. Airbnb says is a de facto ban on Airbnb.
Starting September the 5th, New York's restrictions on Airbnb short-term rentals have been strictly enforced. Firstly, entire apartments cannot be rented out for less than 30 days. So if you're hoping to rent an entire apartment for a week, sorry, that's not going to happen. Additionally, short-term rentals must first be registered with the city government. During the rental period, the landlord must stay in the same property. So if you want to buy multiple properties and put them on the market as Airbnb, not going to work. Moreover, there can only be a maximum of 2 renters at the same time. This essentially rules out families as potential renters. Can you see how strict this law is? It doesn't just limit Airbnb's operational model in the city. For many guests and landlords, it's practically a complete ban. What's interesting is that the protests on the streets have been polarized. On one side, you have those in favor of the Airbnb ban, mainly individuals struggling to find rentals, lamenting their plight. On the other side, you have landlords claiming they can't find tenants, can't make money, and can't repay their mortgages, expressing their hardships. So what benefits are there in cracking down on Airbnb? Since the law was enforced, approximately 11,000 rental listings disappeared from Airbnb in New York. As the regulations have been in place for less than a month, the specific impacts on the economy and the well-being of residents are yet to be fully realized. One potential outcome I can foresee is investors selling their properties because the investment is no longer profitable. This could lead to a drop in the selling prices of similar properties in New York. Some investors may convert their short-term rentals into long-term ones, increasing the supply and potentially driving down the rents. With the rapid decline in short-term rental listings, we might soon witness a surge in hotel prices and a decrease in the number of tourists. As for the comprehensive effects of this law on the economy and the well-being of the residents, only time will tell. From Melbourne to Australia and then to the United States, let's come back to Australia now. For investors currently holding Airbnb properties, those considering converting long-term rentals to short-term, and even those thinking about buying properties only for short-term rentals, how should they navigate the emerging trends? The primary focus of Airbnb's crackdown seems to be in the most densely populated areas, namely the CBD and its surrounding regions. These areas are often saturated with high-density residences, and the potential to release a significant number of properties is high. Traditional vacation spots such as skiing and surfing destinations won't be affected in the short term. So, if you own a property around the CBD, it's time to prepare for these changes. Now imagine this, you buy a property listed on Airbnb and initially the rent is good and the cash flow is positive. But as Airbnb's operational costs rise and the regulations become stricter, you find it increasingly challenging to manage. Then you realize that the property's value isn't appreciating. A significant chunk of potential profit is missing. And if you switch to long-term leasing, the rent won't cover the property's holding costs. In such a scenario, the longer you hold onto these investment properties, the more you lose. Eventually, you might be forced to sell at a loss. So if you're thinking of buying a property exclusively for Airbnb without considering property appreciation or having a solid long-term rental plan as a backup, you might want to think twice. It's best to consider Airbnb as a secondary option, prioritizing capital appreciation and stable long-term rentals with Airbnb as a backup. A few days ago, a follower of this channel from Taiwan reached out for advice. He mentioned he had no Australian visa but wanted to invest in a property in an Australian city and list it on Airbnb for short-term rental. I didn't respond to this question immediately as it wasn't a straightforward answer. Foreigners face various restrictions when investing in the Australian property market. For instance, in most cases, they can only buy new properties. They also have to pay additional FIRB application fees, stamp duty surcharges, land tax surcharges, and so on. And even the mortgage interest rates are 1 to 2% higher than for locals. So for a pure overseas individual to buy a property in Australia just for short-term rentals, I'm not sure about that, unless it is in a less affected tourism destination such as a skiing resort or a surfing town. Another client, a Chinese business owner based in Indonesia, also inquired about investing in the Australian real estate market. Given the recent changes and evolving trends, I was curious, can overseas investors still make a profit from Australian property market? So I spent an entire day creating a model analysis, covering major cities and variables like local loan ratios, interest rates, application fees, stamp duty surcharges, land tax surcharges, capital appreciation, rent, and more. I also analyzed the different property types, including standalone houses, townhouses, and apartments, to find the optimal strategy. Surprisingly, I identified an excellent investment solution for overseas investors in Australia. Only in this particular city, investing in this specific type of property using this LVR and holding structure is it suitable for foreign investors. I'll include the detailed analysis and modeling in the upcoming course, Aussie Property Strategy Master Class version 3.0 Complete Edition, which I'm still working on. It'll be available soon. If you're an overseas investor interested in Australian real estate, I recommend consulting with us ASAP. If you've made it this far, please give a like, subscribe, and share this video with your friends. Turn on the notification bell to watch new weekly videos, and follow me on social media at RealCoachAlex. Hope to see you soon. Have a good one. Bye-bye.